This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads, but it's all one advisory. This is Beyond the Spotlight, a part of that advisory. That is a video that spotlights 2 or 3 markets that may become trading opportunities for this week. This week begins with Monday, April 6th, 2020. First, please pause the video and read the disclosures so that you understand the risks involved with futures and commodity options trading. This is a snapshot of what the advisory service looks like. It's an email service directly to your inbox. You get a timestamp so you know when the trade recommendation was sent out, a write-up of the trade so you know the facts behind the trading strategy, the precise entry and exit orders, whether it's a futures contract, commodity option, option spread, future spread, any pertinent information like margin or days until option expiration, and a chart that you can click to view. So the first chart we're going to look at is the June 2020 British Pound futures contract. And actually, a trade recommendation was sent Sunday evening in this market. Things are happening fast. So the recommendation was already sent out. As you can see here, the contract is rolling back over to the downside. There was resistance up here at the 125 even level. You can see the stochastics indicator showing strong downside momentum. Right now, your trend indicator, this is the MACD. It's a little bit flat. I'm not looking to go short this contract until it takes out Friday session low. And that low is 122.13. So the order is to sell at 121.90, because I also want to make sure it takes out that 20-day moving average, which comes in at 121.93. So that order is working to sell on a stop order, good till canceled basis. All the details went out in the Trade Spotlight advisory service email on Sunday evening. But you can see where the risk is. Now, this is typically a little more risk than I'd like to take for this particular trade. It's $1,875, placing the stop loss at 124.90 above Friday session high. Ideally, would love to be above 125, but then you're taking on, I think, too much risk for this market profile right now. But you can see there is the potential for a tremendous sell-off to the 12-month contract low near the 115 price level. That's where I placed the target, 114.90, just above this 12-month contract low, and that low is 114.38 from March 20th. So this market absolutely has the potential to get down here. So what I'm going to do is trail the stop loss as quickly as I can to start to take off some of that risk. British pound carries a high margin. It's $2,970 in initial margin. So you're taking on a lot of margin, a lot of risk. But again, it has the potential to really sell off here, especially with the U.S. dollar strengthening up at this time. Okay, moving on to the second chart, July 2020 soybean oil futures contract. And once again, a recommendation was sent Sunday evening in this market. Again, things are happening very fast, so we want to be able to act accordingly. You can see this July contract is stair-stepping lower. That are these green lines here that you can see the wave in this market. So the market has retraced a bit. We got up to the 27.74 high on March 30th, and now is looking like it's about to roll over again. I'm looking to sell this contract. I got the order out there to sell at 26.15 on a stop on a good till canceled basis. Again, I don't want to sell it until it takes out these lows. Right now, you do see the MACD is flat. That's your trend indicator, and your stochastics is down, but starting to pull up a little bit. So potentially, the bean oil market could come back into this level here, maybe slightly higher, before it rolls over again. But as of now, I want to sell only if it takes out these lows. Hopefully then the momentum picks back up to the downside. The stop loss is placed above this pivot point high at 27.25 with an initial risk of $660. And then the target, as I mentioned earlier, this is a wave projection. So following these recent waves, projecting the market to trade down to that 22 even price level, that would be a potential profit of $2,490 per contract. But that could only occur if we take out these lows and we've got strong momentum to the downside. And the third and final chart is the July 2020 cocoa futures contract. There is already a working order for this market that was sent out last week, Monday. So you should have already received this and working it if you like the trade setup. But what I have here is a double bottom formation. This is a trend reversal formation. And you can see I was looking to buy in a break of this pivot point high, which hasn't occurred yet. The order is working to buy the contract at 23.05 on a stop order on a good till canceled basis. You can see since we've just been choppy. Got awfully close on this trading session here. That high is 22.99 from March 30th. So the market did not break the 23 even price level yet. But still like the setup here, again, with the double bottom formation. The momentum has gotten a little bit choppy here. But the trend, the MACD indicator, is looking like it's getting ready to hook to the upside. So as long as it doesn't take out the 12-month contract low that I have in that ellipse right there at 22.01, that's where the stop loss would be placed if filled at 22 even, actually, with a risk of $1,050 on the trade. As long as the market doesn't take that out, going to continue to work this order to the upside. Recall through the options segment, we're already holding a call option at the 24.50 price level from 50 points or $500. That is a July contract, so that there is plenty of time until option expiration. Option expiration for that option is June 5th of 2020. So looking to hold that as well, and then get long the futures contract once that breakout does indeed occur. Putting up my contact information. If you have any questions, you can reach me, my office line, cell phone, or toll-free number. You can email me at tradespotlight@danielstrading.com with any questions about the markets I covered here today, or the Trade Spotlight advisory service, or just the markets in general. If you're not following the service, I recommend you to at least take a trial so you can see what I'm doing here. You can go to the Daniels Trading webpage at danielstrading.com, click on the Advisories tab, go down to Technical Analysis, and under there you'll find the Trade Spotlight, where you can read more, see recent posts, and click to subscribe. It's a free service to clients of mine, so if you'd like to open a trading account, work with me directly as your personal broker, you can get Trade Spotlight at no cost to you. Please be safe. I wish only the best for you and your family and friends, and happy trading.